Sono così felice di essere qui perché adoro il gelato quasi quanto amo il cloud computing. Purtroppo posso parlare solo inglese. Tranne quando uso il cloud computing per tradurre le mie parole, per favore. Sopportami mentre cerco di parlare lentamente ma copro molto. Per favore fai tutte le domande.
So I'm going to go quickly, but slowly. To answer your question, it's very important when you get into thematic investments to ask who's doing it, what is it, what's the theme. So at the end of the day, thematic investments are about providing investment professionals, you, with a better tool to express your investment belief. So I'm hopefully going to create a compelling case for cloud computing, but at the end of the day, if you don't believe cloud computing, then this presentation is simply not for you. The point of a thematic investment is that if you have a particular investment belief, my guess is it's more about a theme than an individual stock or even a sector, or definitely than a region or a country. So very briefly, you'll see here we have 127 billion. We have today we have 75 billion in ETFs. 27 billion of our assets are in what we would call thematics or subsector funds. We're going to look at one of them really quickly, because the thing a theme does is it breaks your sector boundary. So the question, is it too soon? Are we too late? Is it too specialized? So I'll answer that with this chart. So as you can see, does this have a little laser? No laser. So what you want to see here is, last year, the internet index, the 40 largest companies that get revenue, over half their revenues online. Who are the kings of the internet? Everybody would agree, Facebook, Amazon, Netflix, and Google. We call them the FANGs, right? Up until last year, before they changed the sectors, Amazon and Netflix were never tech stocks. So an investor that went, I'm going to invest in the internet stocks by buying a technology index in 1999, would have missed out on Amazon and Netflix, and thus you'll see in a moment a lot of returns. And now after the GICs have reclassified names, none of the FANG stocks are tech stocks. None of them. So if you want to invest in the internet, or as we'll talk about in a minute, cloud computing, I think we'll agree some of these names are pretty powerful in cloud computing. They're not in a technology index. So you can't simply just buy tech to participate in the newest technology, if you will. So has this really mattered? Well, if you look at these return profiles, it's simply astounding. Even if you bought somewhere towards the height of the market, you can see the S&P 500 did 198, technology actually did 200, but consumer discretionary, led by Amazon, obviously using the internet, did 300%. And the internet index actually outperformed technology by 50%. But the key is this last 10 years. So if you look at this last 10 years, the S&P was up 240, tech and discretionary were tied, 430, 426. Internet stocks were up 700%. Sophia and Andrea and I meet with clients all the time in Italy who say, we do only active management except in the United States market, because it's impossible to beat the S&P 500. Well, only using US stocks, this index beat the S&P by 10% a year for a decade. And if you think that trend's going to continue, only 10% of sales in the US are done online. Only 10% after this whole rise. And after this historic rise of the FANGs, the entire internet index makes up less than 10% of the S&P 500. The FANGs make up 8.5%. Now that's the internet index. That's actually tracked by FDNE, which is trading here in the European continent, over on the Euronext. Blockchain is trading on the Italian Borsa. So that's BLOK, blockchain leveraging kind of the next level tech. But we're going to shift into the middle. So the middle here is this next step in innovation of computing, right? Blockchain is leveraging internet technology. The internet kind of changed the world. But if we go back to just computers, you can kind of see a brief transition from the first computers. Obviously, if you saw that Benedict Cumberbatch film, it was a phenomenal film talking about the creation of the Turing device, which basically created computing. Cloud computing is essentially the ability to compute without having the power in your access point, which for business sake brings us to the most primary way that you would invest in a company. It creates scalability. How much scalability? Infinite scalability. How much computing power can you have at your hand? You're bound by, used to be the device in front of you. That's not true anymore. 5G is going to take these speeds up to 20 gigabytes a second. I'm a huge Avengers fan, and the Avengers movie is 3 hours long, and that's only 6 gigabytes. So I can download the whole movie, probably both of them, Avengers 1 and 2, in less than 2 seconds. I mean, think about that. But more, think about that from the power of the Internet of Things and what we'll see in a couple minutes. So I want to keep on track here. Pull up my notes. By the way, I spent this morning watching the NBA playoffs online, thanks to cloud computing. So continuing on here, that's kind of what cloud was. So now what we want to do is we want to get to who's using cloud. So the question was, is it too specific? Well, is oil too specific? Have you ever bought an oil company? Yeah, oil is a specific idea, right? Eni, Total, Exxon. It's very specific. But who buys oil? Well, everybody. So what companies are buying cloud computing? Well, everybody. In fact, look around your own office. And let's go this way. Every company, government, charity, and person is a possible revenue source for cloud computing companies. Raise your hand if you're giving money to Apple for their iCloud because you just got so annoyed with the little get an iCloud account. Am I really the only one? I'm the only one? 2, 3? Okay, perfect. Growth for Apple. Go home to your office and ask your IT guy how much of your business is now on the cloud. So the key element, why it's so powerful. I couldn't get this slide done in hand, but think about it this way. You have your IT budget on one axis and the time of business on the other. It used to be you started with some computers, and then you waited until you had enough business going on that you then met, you got your IBM guy, and then you increased your price or your IT spend dramatically. And then you went through time, and then you increased it again, right? Now, who start businesses? Is it accountants or is it engineers and crazy visionaries? It's engineers and crazy visionaries, which is why 95% of small businesses fail for mismanaging their finances. That makes sense. Enter cloud computing. And then think about the average business right now as an app or more online. So you need to be able to handle if Sophia's celebrity friends tweet FirstTrust and they all run to our website, we need to be able to handle that flow. In previous life, you could only handle how much you had invested. So if you had invested way too much, probably go out of business. If you had invested too little, you don't get those sales. But cloud computing makes all of your IT spending essentially like your utilities. If it's really cold, you just use more heat. And so what happens is the cloud budget now streams perfectly along with the demand, which is amazing and leads to scalability. But better, because that's what a lot of people who know cloud, that's kind of the key that they think about it. But think about it this way. If you own a cloud computing business, you have a license on the revenue stream of just about every startup company in the world. Amazon gets 14 cents for every ride taken on Lyft, because Lyft moved back to the Amazon cloud service. That's how powerful this is. They're moving back onto their platform rather than doing it themselves. So the revenue streams are really where this starts to come. So what I want to show you here is how quickly this is changing. Every chart you've seen in a thematic or emerging market presentation in your careers probably looked like this. Look at the future of such and such. Look at it. It's always going to go up. So what I wanted to do wasn't to show you a new one. I wanted to show you an old one. This is from our first fact check book in 2011. The data is live through 2010. So in 2010, we did just under 20 billion, and we were forecasted to do 2011 billion in the total cloud market. Okay? It's from Forrester Research. Now, by last year, if you can see that, we were supposed to go all the way up to 140 billion. But this never happens. Everybody says this happens, and then, it comes in a little light, and there's all sorts of excuses. Well, look at what actually happened. We had 175 billion in 2018. We had already surpassed the 2018 expectations by $5 billion the year before, and then brought in another 35. What you can see here is how quickly Gartner is trying to keep up with the market. IT spending is growing about 4.5 times per year because more of our lives are technology. Cloud computing is growing 6 times faster than IT spending. Is it too specific? Is oil too specific? No, you're selling cloud computing to everyone in the world. So you just kind of look here, 21.9%, call it 22% forecast annual growth rates 3 years ago to 3 years from now. Absolutely enormous. Cloud computing is the home to all of these ideas. Mobile tech, Internet of Things, autonomous vehicles, AR and VR. By the way, did you know Apple now has augmented reality Angry Birds? You could play Angry Birds on your kitchen table. It's very cool. You should try it. Governments, healthcare, these are massive, but just looking over at Internet of Things, the Internet of Things is forecast to be between $4 and $11 trillion a year in 6 years. What's the source of IoT? It's cloud computing. Is cloud computing simply higher beta to technology? No. Sometimes that can be the case. Biotech does have a higher beta to the healthcare space. But look at this. And again, the hardest period of time to beat the S&P, the cloud index has an 8.6 alpha. It doubled the return of the S&P, and it has a lower volatility than the technology benchmark. In as much as the Internet Index is a FANG product, the Internet Index is a third FANGs, 25% of the cloud computing product is the other big theme. Facebook, Amazon, Netflix, Google, plus Microsoft and Apple. A couple ideas here, just for time's sake. 2 small potentials for the future of the cloud computing space. The US government has currently narrowed their cloud contract to 2 firms, Amazon and Microsoft, both in our portfolio. The contract will be awarded to one company, and it is worth $10 billion. IBM, their entire business has $18 billion in sales. Their cloud business, which happens to be the only one growing 17% a year, by the way, their cloud business is $5 billion. So one contract from the US government going to either Amazon or Microsoft is going to be double all of IBM's cloud. Secondarily, something that's happening today that I know is in focus, the US government has leveraged these trade talks to try to get 4 companies exposure into the Chinese cloud market. Who are these 4 companies? Amazon, Google, Microsoft, and Apple, who have all already spent billions of dollars building cloud opportunity in the Chinese market, but are unable to sell it over there. I think this is a ton of noise going on right now about the USTR and the Chinese relationships. We'll find out today and tomorrow. The vice premier doesn't get on a plane for nothing. That's kind of what I would say. But who knows? Trump can kill anything. So what we've got here is this unbelievable portfolio with a phenomenal track record and the growth trajectory that seems like it is the one place that every business, charity, government, and person is starting to spend more money on. Gartner, the leading tech source, cannot keep up. They're increasing their future projections by tens of billions of dollars within months. So the portfolio gets you to 3 pure play buckets, 17 pure play stocks equally weighted, 4 tech conglomerates without which the cloud would not exist. That's Apple, Microsoft, Hewlett-Packard, and IBM. By the way, Amazon and Microsoft, anyone aware of their cloud businesses, how their growth? They're growing at 50 to 75%. You can buy it currently on the Euronext SKYE. We're looking to get that trading on your exchange as well. Hopefully we're successful. Here's just kind of a brief look. If you'll note that the top company, Zynga, is a small e-gaming company. They do Farmville, Words with Friends is fairly popular. They just licensed 2 brands that they're going to bring out mobile games for later this year. The brands are Game of Thrones and Harry Potter. I think they're going to make some money. Activision Blizzard sits in the non-pure play bucket. Activision Blizzard sells Call of Duty and World of Warcraft, 2 video games that people love to play online. They just make more of their revenue currently from selling the disc. So as you can see, the evolution of an index, if it's theme-based, gets you into the right stocks, no matter the sector, and then they can move. So Activision Blizzard can move from there into the pure play bucket. Going back more to some of the kind of future, your wearable devices, if you have an Apple Watch, did you see the newest update from Apple? They now come with an EKG or ECG. If you ever watched a movie, those are the crazy things they rush people into the emergency room for. Get them an ECG. It can happen on your watch right now. The amount of data that comes out, the amount of power that is needed to capitalize on that, and the amount of segments of the world that are being disrupted from cloud computing is essentially all of them. Continuing to see sports moving online. You're going to see football online. All of the American major leagues are completely online. You can watch every individual sports team. Within 2 years, you'll be able to watch any of your favorite teams. Who's the one down here? I don't want to say Juventus. I know that's the wrong one. Right? AC Milano, right? Yeah. That's a good save from the American. Automobiles, self-driving cars, it necessitates cloud computing. And on the cloud needs to be secure. So the major play for autonomous vehicles is a cloud portfolio and a blockchain fund. I don't know if the car companies are going to be the ones behind that, but we'll see. You can see they're already getting involved with the tech companies. So Ford is partnering with Lyft, I believe. GM partnered with one of the companies yesterday. And then the last thing here, you can just see connected devices. The key to solving climate change, the key to managing data, the key to selling you what you want and getting it to you faster, the key to educating the developed world, solving vaccination problems and healthcare issues, all lies on cloud computing. And the key members of the cloud index continue to be the same names that are driving the world around, which is Facebook, Amazon, Netflix, Google, Microsoft, Apple, and then some of these smaller pure play names. Oh, there is a thing. So, and that's in your portfolio. So you can see this whenever you want. Again, the non-pure play names, they get 1.7% each. These all get 4.7%, and these each get 2.5%. So very thematically expressed portfolio, hopefully a better tool to allow you to express your belief. If you think cloud is going to continue to grow like Gartner does, then look in your portfolio and think, what exposure do I currently have to this theme? So I hope I've answered your question. I don't know if there's time for questions, but
it's time to
go.
Right,
okay.
Go.
Thank you.
That's
Thank you very much.
interesting. Thank you very much. Bye.